So, hi everybody. First of all, I'm really proud and happy and honored that I was invited to do a webinar here in the prestigious CPA Academy. I've been a listener and a CPA earner of this system for a very long time, and very happy that now is an opportunity for me to be part of it as well. As Scott said, I'm a CPA in Miami, Florida. This rock star picture that you see of me it's actually in my classroom, which is next door to where I am now. And I kind of built my business around QuickBooks training. So although we do offer traditional accounting services, QuickBooks training kind of became our niche, and it really, really opened the doors to going beyond the traditional compliance services, and I guess that's why I was chosen to present this, because I work with a lot of third-party vendors and implement them into my process and into my practice, and over time I have kind of built a good system for onboarding vendors and auditing vendors and figuring out which third-party vendor service or app providers are actually a good fit for my firm. All right, so I'm gonna go to the next slide here. As first of all, I'd like to talk about where do CPAs spend most of their time? Which service do accountants' clients value the most, and which service renders the highest fees? So I want to kind of just talk about this in a conceptual matter. Okay, if you think about it. And I would love to take a poll about this, but we're only doing polls and other things. If you think about it, where do we CPAs spend most of our time? So if we take a look at all the work that we do, all the types of clients, where do we spend most of our time? And I would venture to say that the great majority of our time is doing some sort of compliance services. So it's either preparing financial statements, preparing tax returns, or maybe doing some of the finishing touches if we have staff that does it for us. And we are not really spending time on the fun part, right? So I think, although I'm a CPA, compliance is not the fun part. So I think we are not spending enough time in the fun part. So I'll talk about, the fun effect of working with technology. Now, if we look at our clients, okay, and we start thinking about which service do they value the most from us? Do they value the compliance services the most, right? Or do they value the consulting? And consulting is sort of a broad term, and it takes many different shapes and forms. But when I ask my clients this, from a whole year's worth of interactions, what is the part that you value the most? And typically clients say, I value the most when you give me advice on how to run my business better. Right? Simple concept. And a lot of our engagements are not around this topic. A lot of our engagements are around the compliance services. So when you think about, if you focus most of your time doing the stuff that is fun, right? And technology consulting to me is very fun. Or service consulting or efficiency consulting, that's the fun part for me. And our clients also align ourselves with us that is the piece of our work that they value the most. Then wouldn't that be essentially what will render the highest fees? So that's really what I want you to think about. Is bookkeeping, accounting, and tax what renders the highest fees, or is it consulting? And that's kind of the beginning point that I wanted to frame. Let me run a polling question here real quick. I just kind of want to know whether the majority of this crowd is CPA or not, because I really want to talk about the challenges that we have as accountants in terms of recommending, right? Because we know that we're regulated by the state or specific industry regulations that prevent us from having to go beyond that independent sort of advisor role. So when we talk about being a consultant or being an advisor, so pretty much 90% of the crowd is a CPA. So then we can talk about, so then I want to spend some time talking about the concerns that we have. So let me tell you the story about how I shifted from compliance to consulting. And really what ended up happening was, I would say probably about 6 years ago, when I was at a client's office and I was talking about a tax return This is like 2008, 2009. We were talking about a tax return, some issue with tax return, and I was trying to get some document to be printed from the client's computer that was sitting on a server, and they couldn't access the server, and then they called the IT person. And I just remember wasting a lot of time dealing with technology issues. And just spur of the moment, I said, hey, why don't you have your documents in the cloud somewhere? Why don't you have them in some sort of third-party app, right, where you log in and you can give me access to it instead of doing all this dancing around trying to get a paper to scan to store it or print it or get it from the server. And then the magic question happened from that client where they said, well, okay, which one? And then I was like, oh, wait, hey, listen, I'm an accountant. I know new recommendations. I'm sort of passive aggressive with this whole recommendation thing. I'm just saying it sounds like a good idea, but I can't really tell you what technology to choose. And then I started thinking, was that the right approach? Why can't I just tell the client, listen, I've used this one works. Or maybe I don't use this one, but I have a partnership with them. They give me access to education. They give me access to tools. They give me access to specifications. They have great customer service. I know a guy in their customer service line. Let me connect you with this application, and then maybe it's a good fit. And then I started thinking, is this outside of what is meant for me to be a CPA or for it's meant to be an accountant? Is this, am I crossing the line of independence by doing this? I wasn't doing an audit or anything like that to that client, but that was kind of the thought that I started thinking. Hey, listen, I'm in my I'm in my 30s. I like technology. I'm a computer geek. I know the technology that works for me in my office. Why can't I just make recommendations to my client? And I started thinking, so if I do this, will I lose independence with my clients? And the answer is, for the most part, yes. If you are looking into your client's computer system and you are telling them to buy specific technology, and this technology is affecting how financial statements are being prepared, we are. So obviously this is something that we have to be very careful with, because some of us do compliance work and assurance work that requires that independence. But let me tell you, what really created a huge mark for me was when I became a CPA. This was one of the proudest moments in my life, right? Becoming a CPA was one of the proudest moments. I have those 3 letters. Now I'm gonna be rich, or whatever I was thinking at the time. I'm gonna be successful. I made it. But one thing I noticed that before I was a CPA and after I was a CPA, I noticed that what I do got actually more commoditized. So what I do, it's actually less unique than before, because before I could say I'm an accounting consultant and that sounded really neat, but now I say I'm a CPA and then people automatically label you as what they think of a CPA is. So after I learned the hard way that it was harder for me to differentiate myself after the greatest achievement of my professional life, which was to become a CPA, I knew I had to do something. And given my technology inclinations, I figured, what if I really become good at understanding what is the technology that helps my small business clients become better. And because I'm a QuickBooks person, I'm a QuickBooks consultant, and I've been a QuickBooks consultant for a very long time, I figured I'm going to concentrate on third-party applications that talk to QuickBooks, that enhance that efficiency and that overall user experience. And I'm going to start reaching out to all these vendors and saying, hey, listen, I can recommend your product, give me something, right? And that something could be represented by many things. It could be support, it could be a free account, it could be maybe commission or a referral fee. It could be exposure, and we'll talk about exposure in a second, because some of these third-party vendors, they have tons of clients too, and by you being affiliated with them, you get you have exposure by association. So this is the reason why I am no longer, I am a practicing CPA, but I no longer provide any assurance work, because it's difficult for me to look at a client doing something that is extremely inefficient and ineffective and not say something, to say, hey, we got to do something about this. Hey, we have to improve this process. So this is why and how I made my shift to consulting instead of compliance. Now, some of the really large vendors that are in the United States that have great products and great services that I use for my practice, that I recommend to my clients are TSheets, Fundera, Avalara, Intuit, Bill.com, HubDoc, and Finagraph. And towards the end of the webinar, after I kind of finished telling the compelling story and how to audit all these vendors to figure out which one fits your practice, I will talk a little bit about TSheets, a little bit about Fundera, which are the sponsors of this presentation. So obviously we have to give them a little bit of love towards the end. But this is not a presentation of the specific apps themselves, right? There's other venues to do that. Now, I want to talk about Intuit specifically because Intuit is the biggest one of this group. Intuit has an interesting partnership program that is actually not labeled a partnership program. What Intuit does is they certify you as a QuickBooks certified pro advisor, and through that certification, you get exposure, you get even discounts. Like TSheets has a partnership with Intuit, and if you're a pro advisor, you get even more of benefit from being an Intuit and TSheets partner in combination. So it's one of the examples. They give you access to software for a lesser price, like if you're a QuickBooks Pro advisor, and I think a few or most of the people here probably are, you have access to the software, you get certified, you have better support. That's a great example of what a good partnership program looks like. In the case of Intuit, you're paying for it. In the case of like TSheets and Fundera, which are the ones that we're going to talk about towards the end, those actually don't have any cost associated with it. So it's all benefit, right? No cost, all benefit. But with Intuit, if you want access to that, you have to pay. With HubDoc, they also have a free one. Finagraph, you pay, right? You have to pay. And again, everyone has a different style. Some are things you pay, some are things that you invest in. But for the most part, the reason why we do that is so we can make recommendations, and that's why they want you to become app consulting. Now, they want you to be a partner and provide consulting for the apps. Now, why is app consulting a catalyst of value pricing? Value pricing is one of those things. I'm sure everybody here has seen at least 3 or 4 webinars on value pricing. Value pricing is a very strong movement in the marketplace, trying to shift our industry from hourly fees or 6-minute increment fees or whatever crazy things people do nowadays into looking at a project, evaluating it, talking about value with the client, and showing or offering a value, a complete upfront price based on the value you provide to the client. Now, value pricing is great for accountants because as we get better and faster, we don't get penalized, right? Because think about it, 10 years ago, it probably took you, just say a number, an hour to reconcile a bank account. Now it will take you 20 minutes. Now, those 10 years of experience and practice, has led you to increase your fees as well. But, the fact that you can do it in a third of the time or a fourth of the time should not penalize the value you're providing to your client. Therefore, I think app consulting, it's a great piece of value pricing. Why? Because if a client was to go out and purchase TSheets, for example, and so they can manage their timesheets for their employees, and you as an accountant pay for TSheets yourself, let's say, and you provide your client a all-inclusive payroll and timesheet management service for a value price that is considerably higher than what your regular hourly fees would be, your client sees a value because they're getting something that they would otherwise pay for in the outside world, is one of the examples. So I think that whenever you offer the clients a service that is beyond what they understand to be those hourly fees and those things like that, having these third-party applications that you include as part of the value, the clients start associating all these goodies, right, as extras they're getting from you, and it's making it much easier to offer a value price or something like that. Before I do that, and we'll talk about the fun effect of consulting, let me do another polling question here. I'd like to know how many of you actually offer assurance services. So we're talking about and really I want to see the ones that focus on that. So if you do 1 or 2 audits or reviews a year, yeah, I really just put no. But if a big area of your practice is audit or your reviews, and in some case compilations, yeah, I like to know, because you're probably going to be very passive aggressive on the type of recommendations that we make. You know, we're going to do what I call the distant recommendation, where we just kind of point at it and not get too much deep into it. That way we don't lose that independence. Okay, but see, interesting enough, we have 92% of the votes already, and we have 90% of the people are CPAs, and from this group, less than 20% actually offer assurance services, which is pretty interesting, because the whole reason why we became CPAs in the first place is to do this. So it looks like, you know, if we're talking about 80% of people not offering assurance services, that means that you're doing tax, or you're doing maybe consulting, and some of these things that I'm telling you, you pretty much already know, right? Now, let me talk to you about the fun effect of doing technology consulting. Technology consulting is the one thing in our industry that we know for a fact will change and evolve. And it's the one thing that we know for a fact that your client is going to require perpetual guidance and support, right? Our industry is all about perpetuity, right? We want to grab a client and have that client forever until we retire, until the client dies, right? And even to the estate planning, the post-mortem state work also. But what I'm saying is, you know, most of us, this is what we take pride in. We grab a client and we have them for life. We love that perpetuity effect. Now, the problem with the perpetuity effect on compliance services is that they're pretty much the same thing every year, you know. So when they are the same thing every year, yes, you get more efficient, you get faster and probably more profitable, but they don't get any more fun. They get tedious, they get repetitive. And after a while, when you're doing the same thing for like 100 clients, you may even mix them up and think you were doing it one for the other, because all clients start looking the same. But what technology does, especially with the proliferation of apps and smartphones, is that it sort of keeps you on your toes. And although it's fun from that perspective that is changing, it could also be intimidating, and it could also be frustrating. So if you're going to get into the app technology consulting, app consulting business, you also sort of have to make this self-commitment to have to focus on understanding the whole plethora of apps that are out there, you know, how they compete with each other and compare feature by feature. And this is where their partnership programs help, because the best of the best apps have a partnership program, because they understand that our time is valuable, and they understand that it takes us a while to be able to get into that groove where we're understanding it and we feel comfortable for recommending. That's the other piece. Most small business owners value the opinion of their CPA most than anybody else. Okay, in some cases the attorney, right? But I think most business owners, their CPA's word is the most valuable, and that's also because we tend not to give a lot of unwelcome advice. Typically, we wait for them to ask us a question and then we answer it. We are typically not very proactive in giving advice, because we know that because our word is so valuable, diluting it with so much advice through the year could lower that brand or could lower that strength. However, if you are, like myself, a person that takes pride on what they know now and what they're going to know tomorrow, and they're continuously learning and improving, understanding what these new apps do, and building these partnerships with different vendors, then you are no longer afraid of it, and you are giving proactive advice the entire year. And it's not about how much time you spend, because, you know, like that that urban legend of the engineer that went to a factory that the whole production stopped, and he went there, spent 5 minutes, tweaked one thing, fixed it, left, and sent a $5,000 bill, and they said, wait a second, why are you billing me $5,000 for, you were here for 5 minutes and you tweaked something and you left? And they said, and you know, just to be smarty pants about it, they said, send me a itemized bill, right? This is how customers delay payment, right? They just ask for more itemization, and the guy splits it up and says, you know, replacing a bolt $5, knowing which bolt to replace, $4,995. So that urban legend, which I don't know if it's true or yes, or if it's not, and if somebody knows about it, just put in the chat, put a link or something, because I would love to know the source of that. But the concept behind that is, as we get older and smarter and presumably better technology-wise, we can provide solutions, much faster. Sometimes we don't even have to research. Sometimes we just know exactly what the answer is. And how do you put a dollar value to that? You can't, or you can, but you can't justify it or itemize it with time. So that's what app and technology consulting does. Is it really puts your experience at the forefront of the value. Okay. All right. So we already did that. So okay. So that was a very long introduction. Let's talk about the specifics. So what are the things that we look for when partnering with a third-party vendor, let's say like TSheets or Fundera or like Intuit or Bill.com or whatever? What are the things that we look for? Well, we look for potentially an affiliate link. An affiliate link is when they give you sort of a special link that you can put on your website, you can put on your email. I know some people that actually put their affiliate links on all the way in their footer and the emails, and right when there's their name, their company name, and at the bottom says I'm a TSheets partner, and there's the link. And what the affiliate link does is it allows the client to shop for the product on their own, make the decisions on their own. All you're doing is driving traffic to that website, and then if the client buys or activates, you get notified one way or the other. So either you get an activation bounty, so you actually get paid for that indirect referral, and that could be something that you're just putting on your website, or maybe you're actually telling the client, go to this link. It could be either or. Sometimes they do revenue sharing, where instead of just paying you for the activation, they'll give you 10%, 20%, 15%, whatever of that recurring revenue. And some of these third-party vendors do this forever, so they really value the CPA relationship. Think about that, right? If you're getting paid forever on your referrals, that's a pretty big deal. ADP, which is probably one of the largest CPA-seeking third-party vendors, they offer revenue sharing too, but I believe, or I remember, that they do it for like the first 5 years or something like that, and then afterwards they own the client forever. So you want to see if this app developer or third-party vendor for services is giving you recurring revenue forever for the life of the account. Wholesale pricing. Wholesale pricing is interesting, right? This is when, let's say, for example, and I'm just going to use an example. Let's say if a client was to pay $40 a month to pay for QuickBooks Online, and the wholesale pricing model of Intuit allows me to pay, me as a CPA, pay 20 instead of the client paying 40, I'm getting a discount because I'm presumably wholesaling it. That means I'm getting a lot of different clients paying a lower fee and then reselling it. I could choose to either resell it and make $20, $15 a month, whatever it is, or I can choose to include it as part of my service. So I like the option of wholesaling too. Now, transferable discounts is interesting. In some cases, wholesaling means you get a better price for you to resell it to your client. And in some cases, you get a deep discount, maybe not wholesale level, that you can, instead of you paying for the lower fee, you transfer to the client, have the client pay for the lower fee, and you look like a hero, you look like an awesome CPA that not only saves them money on taxes, but also saves them money on apps. And also, the free personal use account is big too. Sometimes for these third-party apps, and let's think of TSheets, for example, for me to recommend TSheets, I need to use it myself. And I actually have one of my data entry people use it, and she is absolutely ecstatic about it. She loves it. I mean, and who loves putting time in the system, right? But she does, because they make the software so easy. But a free personal account or a deep discount for a personal user or a firm access account, that to me is big too. So these are what I call the financial benefits, or the potential financial benefits of the partnership. Let's talk about the non-financial benefits, right? So assuming that you find a third-party vendor that actually doesn't provide any financial partnerships, let's talk about the potential non-financial partnerships. So let's access and training and support. That's important, because sometimes by just having access to information that my competitors don't have, and being a CPA that's great at taxes but also understands accounts payable management and is recommending Bill.com, that's a big differentiator. Okay, as I mentioned before, when I became a CPA, the proudest moment of my life was to get those 3 letters, and then all of a sudden I'm being pinned down and compared to every other CPA out there. And some of these third-party vendors or app developers, some of these partnerships create that differentiation, because now it's not just a CPA, it's a CPA that knows how to manage employees' times on the field. It's a CPA, like with Fundera, it's a CPA that knows and understands what kind of small business loans are out there, what options are there, what alternatives to banks are out there. So just having access to that information just makes you a much bigger knowledge source, and your clients tend to trust you more for things that are beyond that compliance stuff. Now, access to top tier support, that to me, it's huge. Okay, you know, when you become like an Intuit Pro Advisor, for example, when you become a Pro Advisor, one of the big benefits of that is when you call, you don't get the call center in Singapore, right, where they have churn of employees. When you call, you get their top tier, level 3, amazing customer service people, and they're going to put priority, they're going to give you clear answers, and they won't rest until you say, wow, you gave me way too much answers, I'm overly satisfied. So that to me is a big deal. When a third-party developer, the app developer or service provider values their partner, not just from a financial perspective, but from a support perspective, that to me is big. Expedited client onboarding, that to me is huge. For example, Fundera, when you refer a client to them, name, phone number, done, right? The deal closes, deal doesn't close, you will know at the end, you don't have to be involved. They will ask for financial statements, yes, right? So you're going to have to provide that. We understand, and that will be our role. But from the perspective of having to babysit the client or handhold them through the process, that's great for Fundera. TSheets does the same thing. You know, when you send a client to TSheets, they'll take care of everything for you. Intuit, not so much, right? You send a client to QuickBooks.com, and you know, maybe they'll figure it out, and they're going to need your support throughout, you know, setting up your QuickBooks. So that's the interesting piece about it. Some app developers and some service providers take great pride on making you look like a superstar by grabbing that client, onboard them, and not have to require you to do that hand-holding and taking them step by step. Now, beta testing and ability to give feedback on improvements, that is really big, because some of these third-party vendors, like Fundera, like I speak to Meredith, I tell her things like, hey, you know, why isn't your application process like this or like that, or why don't you have the ability to do this or to do that? And she values the relationship, you know, Fundera values the relationship they have with me to the right people, and some of my feedback has made them a better company, from my perspective, obviously, because I suggested it. But TSheets is the same thing. You know, I say, look, your software has this great glitch. My clients are bothering me about this particular thing, and they jump all over it and they fix the glitch. So having that ability to give feedback on improvements, prioritize feedback, and also having access to their greatest and latest additions that they're testing, or new products, having beta testing, that to me, that's the fun part, right? So knowing ahead of time what's going to be out there. But the most important thing is positive brand association. You want to work with third-party vendors that have a good reputation, that have good customer service, that clients generally speak good about. Because what ends up happening is your own client that you have no clue that they were shopping for a third-party timesheet solution like TSheets stumbles upon TSheets, has a good positive view of TSheets, and then they come to you and they say, hey, what do you think about TSheets? And if you say, well, actually, I'm a TSheets partner, that all of a sudden creates a really strong connection, because your client already had a positive association with that brand, and you are a partner. That's wow, right? So the same thing happens with QuickBooks, right? QuickBooks has great marketing. When your clients come to you and say, hey, what do you think about QuickBooks? And you say, well, I'm actually a Pro Advisor. And if they already have a good positive view of what QuickBooks is, the positive view towards you as a CPA,
Yep.
I did see a question that says, how do you recommend the disclosure of referral fees to your clients? Okay, so that's a really good question. One of the things that I normally do is, if I tell somebody that I'm a Fundera partner, or I'm a Fundera or a TSheets partner, the word partner, implies a financial relationship, right? I can't think of somebody talking about having a partner in a business context where we're not thinking that there's a financial tie. So by disclosing that you are a TSheets partner, a Fundera partner, an Intuit Pro Advisor, there's this implied financial relationship. However, with the case of TSheets, for example, get a referral fee or a recurring, to take that and transfer that as a discount to your client. So if you don't feel comfortable disclosing the fact that you are a partner, that you're in a relationship, that you have this system in place where you sign up a lot of people, they do refund some of the fees you pay for your own service, or they do comfortable with that, then make sure that you work with a vendor that actually has that feature. Now, in terms of actually getting paid, if you are getting paid and you have a client in which you ever will provide some sort of assurance services, you have to disclose it, right? If you're not doing assurance services, and if you're doing just tax returns every once in a while, and your clients are clicking on an affiliate link, you don't have any independence issues there. Now, not an expert on independence studies for audits and stuff like that, but I think it's pretty obvious. Now, in terms of sheer numbers, some vendors, like we have one of the questions saying, can I become a wholesaler of QuickBooks Online? And the answer is yes. But some vendors will have a minimum, like you have to sell so many per month, or so many per week, or so many per year. Some of the greatest relationships don't have any minimums. So like TSheets, for example, or Fundera, they don't have any minimums. Bill.com doesn't have any minimums. So that's really important. But the last real piece here is, if you have independence requirement, you have to disclose that you're getting paid sort of behind the scenes. If you have independence requirements, but the client is not paying, and you are getting access to those deep discounts that you include in your overall price with your client, then there's really nothing to disclose, because you're the one who's paying for the service. So it's all about getting royalties, or getting commission, or getting bounties for activations. And I can say it up front. Like I said, look, I'm a TSheets partner. When I recommend them, they do pay me. However, I don't recommend it because they pay me. I recommend it because I use it myself. That's key, right? If you work with a third-party vendor or service or app that offers a free account for you, and you use it and you love it, I think that's primary. That's the most important piece, because that way in your heart, not just the ethical piece, but in your heart that your recommendation is actually based on your usage and your experience with it. So I have no issues with CPAs making money for app recommendations. I don't think that's a problem. I don't even think that's an ethical issue. But you do have to recommend it. You do. Now, some laws, some countries, and some regulations actually completely prohibit it, right? Completely prohibit it, especially if you're doing audits for public companies and stuff like that. That could be completely prohibited. But in the small business context, right, there's no issues for you getting paid as long as you disclose it, right? So that's my take on that. That is absolutely my take on that. If there are any more questions about it, go ahead and ask me or email me. I will give you my email address if you want. Again, I'm not an expert on independence, right? Because I myself became a consulting CPA, and I don't do assurance services. But for the few of you that are actually doing this, these things you may want to look at. Maybe you want to call your local state association, or maybe just call up the licensing and say, look, what are the guidelines for this in my state, and that sort of thing, especially depending on what role you play for them, if you're inside or outside, or all those things, right? Because obviously we don't want to lose our license because of a partnership. Now, I want to talk about examples of a strong partnership. In the case of Fundera, let me just do an example. I think if I go to the website, it'll be easier to show. In the case of Fundera, and I created a dummy account here so I don't show all my active applications for my clients. In the case of Fundera, one of the real nice things about it is it's got a very streamlined look, right? This is what it looks like. This is what the portal looks like. If you have a client that wants to apply for a small business loan and they're not bankable in a local bank, and they're sort of afraid to go to a loan broker because most loan brokers are sharks, that's what Fundera does. Fundera partners with all the financial institutions that specialize in small business loans. They're not loan sharks, right? They are loan brokers, but they use the power of the internet and the power of the crowd to negotiate best possible fees. Now, you as a CPA, what does that look like to you? It looks like three possibilities. One, I go to refer a customer, and I can actually just put my customer's name, phone number, email address, hit create account. Your client is going to be contacted by Fundera. The whole application will go through them. You can be involved in at the end before they close to look at the closing statement, look at the fees, look at the interest rate. You can do all that, but you don't have to be involved to the process. We are CPAs, we're not loan brokers, okay? But if we go to apply as a customer, some CPAs have the type of customers that actually say, nope, I want to sit down with you and I want to do the application with you, and I want to sit there and I want to make sure that the dollar amounts that I'm putting make sense and all that stuff. And obviously that's a huge break of independence, right? Now we're doing pure loan consulting, right? And if you have an independence issue, you can't do this. Now, so you put information and you fill out the application with the client, and it's basically a credit application. Now, some of the really cool things about it, these are examples of good partnership programs, is it can connect to your current system and pre-fill some of the information from your current system. So we have name, address, all that information is in QuickBooks. Why annual revenues? Why do I need to retype it if that's already in my QuickBooks system? Now, obviously, we may have to annualize it manually and project and stuff like that, and we can overwrite these things. We don't have to use exactly what information that comes in from QuickBooks. And then we have the link. So I'm going to show you. I'm just going to copy this link here. So I got declined for a small business loan in the bank. I really need a big account with Target or Walmart or whatever, and if I don't get financing soon, I'm not going to be able to fulfill this purchase order. Some of the things that you can do is you just copy and paste that link, reply on an email saying, try this, right? And then this is what the client will look like. The client will do it all on their own, and then you will get credit in the back end for that. Now, credit on the back end for that, I'm going to specify that, right? Because credit on the back end means we actually get paid a referral fee, or it can mean that that is your client and you opted out of getting paid commissions, right, or percentage of the loan, and you opted for the client to actually the client themselves to get the same benefit you would have received as a discount. So if you actually do that, if you actually go for that, then the client does the whole loan process on their own, and is their experience. You don't have to be involved, and that to me is an example of a great partner program. Now, another good example of a great partner program, it's help you use the partnership for marketing. Okay, so use the partnership for marketing. So here on the marketing section of Fundera, when I click on materials, it tells me, it gives me sort of a sales sheet, and I can have that sort of on my desk or in my office, and you can just give it to them and say, hey, look, there it is. And obviously, if you're going to print it, you want to put your link in there. The clients can sort of going to go on their own, or you can tell them, I'll email you the link for the application. Another thing is educational sources. So from there it has information about SBA loans. So I'll click on that. That will take me to a sort of an SBA loan guide, and these are good for you to have. For example, there's the SBA loan cheat sheet. So all these clients out there think that the SBA gives money to all these companies, and I have clients that are Latino or women, and they say, well, I'm a minority, so the SBA is going to give me money for my business. And there's a lot of misconceptions about what the SBA does. So, these beautifully put together packages explain the types of loans that are out there. So that way, when you're shopping for these loans and you're shopping for the terms and the APR, and you're putting your loan narrative together, you understand exactly what is it that you're looking for, and you're doing this in a wise manner. Now, let me switch to TSheets real quick. And before I talk about the TSheets partnership, I like to talk about the TSheets software itself, because even if TSheets did not have a partnership, it wouldn't matter, right? Because they're very unique what they do. TSheets is a timesheet management system where like, for example, this is actually mine. I have one employee working on this customer here, and she's been working on that customer, for 15 minutes already. Okay, so that to me is huge. I can know what employees are doing what. I can go into each of my customers and see how much time they've been spending on each customer. We can edit timesheets. We can set up approval processes. So if you have clients that you do payroll for, you know this. If you do payroll for your clients, you know this. The most difficult thing is to get your clients to actually fill in a complete timesheet. I mean, the employees have timesheets all over the place, and they're incomplete, and they don't put their lunch hours or whatever. So TSheets is a complete timesheet management system, and just opening your client's eyes towards going from a manual timesheet system into TSheets, that in itself makes you a great consultant, and it makes you a hero if your client didn't know about it. And on top of that, they have a partnership program. So on top of that, they have a partnership program, and the way the partnership program works, and let me just go to resources. Partnership program does, it gives you access to infographics, presentations. So if you were going to go to maybe some big company to talk about timesheet management, you have presentations that you can use. You have the badges, and that's what I said about differentiation. Like I use the badge in my blog. Like I'm going to go to my blog real quick, going off tangent a little bit, but I want to show you, for example, how I wear, how I use that. This is my blog, and down here under my picture, I have TSheets Pro, and that's how I differentiate myself. I tell people that I am a timesheet expert. I am a timesheet consultant. I think that managing your employees' time, it is such a crucial thing that you should work with your accountant in improving that process. And when people click on that, and I have like 15,000 visitors in that website alone a month, people click on that, they go to the TSheets website, they don't know that that's an affiliate link, and if anybody signs up for that, I get paid. So I don't even know who the client is half the times. So that in itself, I think, is another great example of a great program. Certification. So you have the ability to, and this is a dummy account, so so this is actually one of my second firm's account, so I don't have my actual certifications in here, but you actually go through, they have webinars, they have a quiz that you take about timesheets and stuff like that, and you become a TSheets Pro. You have access to a link. You can email your referrals directly the link, and like I said, TSheets will jump and take care of the client for you, so you don't have to handhold anything. That to me, you go back to that slide. That to me are examples of strong partnerships, right? When all these components are there. So these are. Let me just list a couple of questions that I think you should ask any vendor trying to get a partnership from you. These are the questions that you should ask. One, do you have a revenue sharing program? Do you have a free account for my firm, right? Or do I have deep discounts? If you don't have a free account, deep discounts for me to use this and try it on my own. That to me, first overall question. Second one is, talk to me about your customer service. if I send a client your way, how are you going to treat my client? Are you going to treat them like a king? Are you going to know who I am when they say, oh, Hector referred it? They're going to say, oh, yeah, we love Hector. That's what I want, okay? When my clients call TSheets, and TSheets has like, what, 40 employees? I don't know what the number is. And they don't all know me, but the ones that do say, oh, yeah, we love Hector. That's great. You know, that makes the client feel that that you're part of something bigger. Same thing with Fundera. I send my clients to Fundera, and they say, oh, yeah, Hector, awesome. He's a great guy to work with. My clients say, yeah, he is a great guy to work with. That's the type of partnership you want. It's not just the app. It's not just the service. It's not just what you get paid. It's the relationship. And those, to me, are examples of strong partnership programs. The other questions you want to ask is, does your app integrate with my system? Does it integrate with QuickBooks? How does it integrate? Okay. And again, if you're going to give me a free account for me, I can test it for myself to see how it works. Also, what kind of education, training, and materials do you have out there? And preview those materials and scrutinize them. Are these materials salesy, or are these materials true value adding to me as a professional? So those are things that I definitely would ask from a partnership program. So let's talk about the TSheets partnership program specifically. What do they offer? And then we're going to see if the components that I talk about hold up to what they offer. So there's a 14-day trial for the clients. That to me is big, because I don't like to make my clients feel that I'm making them pay for something that they're not 100% sure if they like it. So having access to a free trial for my client, at least if I sit down with my client and test it with their QuickBooks file and their employees and start testing it for 14 days, that's great. And in the case, I don't want to commit to this, but I have spoken to TSheets before, and I've had a client where I had to extend that from 14 days to 30 days for whatever circumstance, usually because, you know, they love Hector or whatever, they do it, but I'm sure that they'll do it for other partners too. You explain the situation, and then because you're still in the testing period. Free account for me, so that account that I showed you that is for one of my bookkeeping firms, I don't pay for that, so that to me is great, because when my client says, look, I'm not sure, can TSheets do this? And I have my own account to test it with. I have the ability to earn commission or pass the discount to the clients, and actually both too. Firm-wide training, so anytime I need something for a new employee of mine, they will train my new employees. When I bring a new consultant, first thing I do is, listen, let me exhaust all my free trainings first, and then I call all my app vendors and say, schedule a training, schedule a training. Every time I hire a new employee, that's what I do. I have them train with all the third-party vendors, because it's free training I don't have to pay for, and it makes my new consultants so much better to think about beyond that sort of basic bookkeeping compliance service. Dedicated support team for professionals, marketing collaterals like I showed you, ways to generate business, the certification, the CIST process, which also earns you CPE, that positive brand awareness, right? Where clients, when they Google timesheets online or something, the first thing they see is TSheets, and they say, oh, I remember Hector's a certified advisor. That's all positive brand awareness. And if you want one of their cool T-shirts or hats or whatever, just call them. I'm sure they'll send them to you. TSheets gives T-shirts like their company was a T-shirt business. Like T-shirts everywhere. Right? I always wear them for the gym, which, by the way, I don't go to the gym that often, as you can tell. I always wear them for the gym, and people always think it's something health or something like that. They're like, okay, well, so and I have to explain this is what it is, and their "We Love Employees" slogan is actually pretty cool, because people really don't love. I hope my employees are not listening, but we really don't love employees. Anyway, all right. So Fundera is, like I mentioned before, small business loans, typically for small businesses that go to their bank and they get declined for a plethora of reasons, and they're national loan brokers, and they have, I'm not sure if it's 30, 40, or 50 financial institutions where they run your case without running the credit 50 times, of course. They run the case and they find the right fit for your client. Now, Fundera doesn't have any cost, right? So for you to be a partner, Fundera has no cost, has access to educational resources. If a client closes, you will get 1% referral fee, 1% of the loan amount, okay? And the average loan amount is about $50,000. So, that's $500 every client that gets approved. And if you don't want to get it, fine. You just send that referral over to your client. It's as if you were giving the clients $500. You added $500 worth of value to your client. So whatever fees you charged to put the loan together, it's $500 cheaper, right? So that's an interesting way of seeing it. Now, in the advisor portal, as I mentioned before, you can refer the clients. You can, actually do the application with them. Free support for your firm, for your employees. If you have any employees that want to understand more about financing for small businesses, you call them up, you schedule something, and they'll walk you through SBA loans, standard loans, bank loans, and all the different types of loans, factoring, those sort of things. And again, if you want T-shirts or mugs or whatever, you get unlimited swag. Now you get them at the conferences anyway. So there's the link to sign up as a Fundera advisor. Let me pull up one more polling question. I believe it's our last polling question, right? And I also want to let me pull that. Let me pull that polling question and click launch poll. And meanwhile, we have some questions from the crowd, right?
Yeah, and actually, Hector, do you mind a couple? This is Scott again. A couple quick comments. I turned off your webcam. We had some intermittent problems where I thought it might be taking up resources that were impacting the phone line. So if you want to flip it back on, we could try again and see if that's been that kink's been worked out. But what I'd also like to do is just go through, give you a chance to look through some of the questions that came through, and then provide some administrative information, because we do have 3 classes that are starting in 5 minutes. So we're we have pretty thin resources here. Just want to make sure that everyone knows the rules for this particular class, and then if you need to jump off and join us for one of the next sessions, you know how to do that. So I'll make this really short, but first of all, we're looking forward to your comments. Please send them in. This is the first time we've offered this particular class to our members, and your feedback is really important to us. So if you could jot us a note actually right now in the question panel, let us know what you thought, what may have surprised you about the session, where you think the rubber may hit the road for you. We're all ears. We'd love to hear what you think, and we take your comments really seriously. And again, Hector, I'm glad we had a chance to finally work together, and appreciate everything you've done. It was great working with you and getting prepared for this, and I really enjoyed the presentation itself as well. Actually, I closed this poll, by the way. We'll get back to PowerPoints, but just know as long as you responded to at least 3 polls and you were logged in for 50 minutes, then we'll get credit out to you. We'll do that by the end of the day. Today, we also recorded this session. We'll post it to our library, which currently has, I think, 430 unique recordings on there. Pretty crazy to think about. But also just want to let you know that there's another session that's going on tomorrow that I think a lot of you will be interested in as well, taught by Darren Root, and that class is going to feature TSheets, Bill.com, Receipt Bank. Lots of companies mentioned during this session. It's a small world. It's a very interrelated world, and hopefully you'll come back, join us for that one too. So Hector, I'm going to turn off my mic, turn it back over to you. You can go through questions and any closing comments, but I'm going to work on a transition. And by the way, great feedback from the audience too. Hope you really, everything here was entirely positive, and you got a lot of exclamation points, so that's always nice.
Exclamations are awesome. Let me, since we're in sort of this election season, right, and and every other channel is Donald Trump, right, so let me make a very important closing statement. So let's say I'm running for president now. So let me make the closing statement that I think is very, very important. Number 1, ethics. People are very concerned about, is it ethical to get paid for a recommendation? Okay, so it's unethical. What is unethical is using your position of, let's call it power, the position of power, the position of trusted advisor, the position of trust, to recommend something that you don't believe on, to get paid and not disclose it. That, for sure, that's unethical. But if you are spending time educating yourself, going to conferences, watching webinars, which you are, everybody here is watching webinars, understanding how these apps work, comparing the apps, becoming better and better in the technology piece, becoming just a much more valuable accountant. If you're doing all that, and then you're recommending the app and you don't get paid, and that's unethical, I don't believe that. So do you have to disclose it? Absolutely. Disclose it. Right? I don't have an issue. Clients tell me, Hector, I want to buy QuickBooks Enterprise from you. They spend $8,000 with QuickBooks Enterprise, and I get paid a lot of money, $2,000. People are going to say, oh, you're making $2,000. Yes, I am, right? And I spent $10,000 learning how to use it. okay, and 10,000, 20,000 traveling and understanding how to recommend it, right? So it is okay to take the position to say, look, I invest time educating myself. I invest time understanding these apps. I invest time building relationship with TSheets and Fundera so I understand how they work and I recommend their apps or their service, right? If I'm spending that time, there's nothing wrong, nothing unethical for getting paid for recommending. That is the return on investment. Okay, and on top of that, you charge for your time for recommendation. So that is the last statement I'll make. My email address is hector@garciacpa.com. That should be easy. hector@garciacpa.com. If you have any questions or comments about partnership programs or whatever, just feel free to email me. And it'll take me maybe a couple of days because I give my email everywhere and all my YouTube videos and stuff. My email's there. But that's my last closing statement. And if we don't have any more questions, I would like to thank CPA Academy. Thank you for the opportunity to present, and TSheets and Fundera for sponsoring this webinar.